Markets remain nervous as members of the European Union are struggling to come to an agreement regarding an energy embargo on Russia. And usually uncertainty scares traders the most, the oil prices keep rising higher. This situation may continue until the European Union finally announces a new list of sanctions against Russia. Yet there are some signs that the sixth package of sanctions will not apply to the energy sector. Thus, yesterday the European Commission published guidance on paying for Russian gas in rubles, saying that this will not be a branch of sanctions. So, as soon as the terms become clear, oil prices will start to slide. Let's see what is happening on the chart. Brent oil futures have closely approached the resistance level of $115 per barrel, which indicates the intention of the buyers to maintain the ascending cycle. If the price settles firmly above the 115 mark on the daily chart, this will allow traders to add new long positions, which may send the asset higher. So, according to technical analysis, oil will continue to appreciate. In a different scenario, the market will turn flat and the price may rebound from the resistance line. Meanwhile, the Russian currency has steadied in the range between 62.50 and 65.00 against the US dollar. The price has been trapped in this channel for almost a week. At the same time, the decision of the European Commission regarding gas payments in rubles should have pushed the payout of this range. Yet we should not forget that the ruble has been largely overbought lately. For the past month and a half, the pair has dropped from 130 to almost 60 rubles per dollar, and there were almost no pullbacks on the way. This has led to a serious imbalance in the market, which is limiting the upside potential of the ruble. The market needs at least a local correction. The problem is that the news background will not allow the correction to happen. It seems that all actions taken by the West somehow contribute to the rise of the Russian currency. Much will depend on the next package of the European Union sanctions. In a case, it will not include restrictions on energy supplies from Russia, and the tension in the market will ease, and the ruble might enter the phase of a correction. In the gold market, the price rebounded and jumped to the level of $1,820 per 3 ounce, right after moving slightly below the mark of 1,800. However, this is just a minor local rebound, given the fact that gold has been declining for the whole month and lost more than $100 of its value. So, the level of $1,800 serves as a pivot point for gold, and in this case, a rebound may still bring the price higher to the range of $1,850 and $1,860 per 3 ounce. At the same time, the downward movement is not over yet and is still prevailing in the market, although with some pullbacks. But nothing has changed much from the fundamental point of view. There is still a threat of a shortage of strategic resources. Therefore, safe haven assets are becoming less attractive to investors. In fact, they are losing their significance while the demand for such commodities as oil or grain is rapidly increasing. So gold may resume growth only after the geopolitical situation improves. And this means that the precious metal is likely to decline further. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.